Okay, so you want to own a funeral home. From the outside, it seems like one of the simplest businesses in the world. People pass away, families need your services, you organize a funeral, and you get paid. It almost sounds like the definition of guaranteed demand. But here's what most people don't realize. The funeral services industry in the United States generates more than $23 billion in annual revenue, with over 19,000 funeral homes serving roughly 3 million deaths every year. That sounds like an enormous market. Yet despite all that demand, the average independently owned funeral home only handles around 100 to 150 services a year, and many struggle to maintain healthy profits. That's the paradox. Death is guaranteed. Profit isn't. Because this business isn't really about death. It's about capacity, reputation, trust, and timing. Understand those four things, and you understand the funeral home business. Miss even one of them, and you can lose money owning one of the most respected businesses in your community. To understand why, you first have to understand why this industry is so much bigger than most people imagine. The obvious answer is simple. People die. But that's only the surface level explanation. The real reason this industry exists at its current scale is because families don't just purchase a burial or a cremation. They purchase guidance during one of the most stressful moments of their lives. When someone loses a loved one, they suddenly have dozens of decisions to make, often within 48 hours. Transportation, paperwork, death certificates, religious traditions, cemeteries, cremation permits, flowers, viewing arrangements, obituaries, insurance claims, military honors, transportation for family members. Most people have absolutely no idea how any of this works until they're forced into the situation. That's what they're actually paying for. A funeral home isn't simply selling a casket. It's selling organization, compliance, logistics, facilities, and emotional reassurance. Think about it this way. If someone asked you to organize a wedding in 3 days with legal paperwork, government documentation, transportation, venue management, catering coordination, and emotional family members involved, you'd probably think that sounds impossible. Now imagine doing all of that while the family's grieving. That's the service. And that's why this industry has remained surprisingly resilient despite changing consumer habits. Now, if you've been paying attention to headlines over the past few years, you may have noticed something interesting. More Americans are choosing cremation instead of traditional burial. According to industry projections, the national cremation rate has climbed past 60% and continues to rise, while traditional burials have steadily declined. At first glance, that sounds terrible for funeral homes. After all, cremations generally cost less than elaborate burial services. So shouldn't funeral homes be making less money? Not necessarily, because the smartest operators adapted. Instead of relying on expensive casket sales, many funeral homes now generate revenue through memorial services, celebration of life events, premium cremation packages, urn sales, grief counseling partnerships, pre-planning contracts, live streaming services for distant relatives, and perpetual aftercare programs. In other words, they shifted from selling products to selling experiences and convenience. That's a much more durable business model. Another trend working in the industry's favor is demographics. The baby boomer generation, roughly 73 million Americans born between 1946 and 1964, is now entering the age where mortality rates naturally increase. That demographic shift alone is expected to keep demand elevated for years to come. And unlike restaurants, retail stores, or luxury brands, funeral homes don't rely on consumers feeling optimistic about the economy. Recessions might delay vacations. They might delay buying a new car. They might even delay purchasing a home. But they don't delay funerals. That's one of the reasons investors often describe the industry as relatively defensive. Notice I said relatively, because while demand for funeral services remains stable, where families choose to spend their money has changed dramatically. 20 years ago, many families simply went to the funeral home their parents used. Today, they compare prices online. They read Google reviews. They request quotes. Some even arrange direct cremation services entirely over the internet. Transparency has increased competition. That means reputation has become one of the most valuable assets a funeral home can own. A five-star reputation built over decades can generate referrals almost automatically. A few highly publicized mistakes can destroy years of trust almost overnight. That's why this business behaves differently from what most people expect. The customer isn't really the deceased. The customer is the surviving family, and they're making one of the largest emotional purchases of their lives under enormous stress. That's a completely different type of buying behavior. Now, here's another misconception. You might think every funeral home operates basically the same way. They don't. In fact, calling them all funeral homes is a little like calling every restaurant simply a place that sells food. The economics can be completely different. The first type is the traditional full-service funeral home. This is what most people picture: a large building with viewing rooms, a chapel, embalming facilities, hearses, limousines, licensed funeral directors, and relationships with local cemeteries. These businesses usually generate the highest average revenue per family served because they offer the widest range of services: a full-service funeral involving embalming, visitation, ceremony, transportation, burial coordination, flowers, printed materials, and merchandise can easily reach $9,000 to $15,000, sometimes considerably more depending on the market. That sounds fantastic. Until you realize these businesses also carry enormous fixed costs: large facilities, specialized staff, expensive vehicles, high insurance premiums, continuous maintenance. As a result, gross margins may land somewhere around 45 to 60%, but after payroll, utilities, insurance, financing, and facility expenses, net margins often fall closer to 8 to 15%. Then you have cremation-focused providers. These businesses operate with a completely different philosophy. Instead of maintaining elaborate chapels and hosting traditional ceremonies, they emphasize speed, affordability, and simplicity. Revenue per case is lower, often $1,500 to $4,000, but operating costs can also be dramatically lower. Some don't even own large ceremonial spaces. Many outsource certain services. That means they can process higher volumes with fewer employees. Margins can actually be surprisingly competitive despite the lower prices. Then there are combination businesses. These own both funeral homes and cemeteries, sometimes even crematories. This is where vertical integration becomes incredibly powerful. Instead of earning revenue from just one part of the process, they participate in nearly every stage. They sell plots, they provide funeral services, they arrange burials, they sell monuments, they maintain cemetery grounds. Sometimes they even generate recurring revenue through perpetual care funds. These businesses require substantially more capital to build, but they also create multiple income streams from the same customer relationship. Finally, you have the industry's largest players. Companies like Service Corporation International, the largest funeral service provider in North America, own hundreds of funeral homes and cemeteries spread across multiple states and provinces. Their advantage isn't that they conduct funerals differently. A funeral is still a funeral. Their advantage is scale. They negotiate lower equipment costs. They centralize administration. They spread advertising expenses across hundreds of locations. They can move staff and resources between nearby facilities when demand fluctuates. The independent funeral home down the street can't do that, which leads to one of the biggest questions you should already be asking yourself. If demand is so consistent, if millions of families need these services every year, and if some companies have built billion-dollar businesses around this industry, where does the money actually come from? Because it probably isn't where you think. That's where the economics start to get really interesting. Most people assume the answer is simple. You arrange a funeral, charge the family, subtract your costs, and whatever is left over is profit. But that isn't how this business actually works. The real business model is much simpler than most people realize. You receive a call, you coordinate every service surrounding that death. You purchase or provide the products required. You organize dozens of moving pieces within an extremely short period of time, and in return, you earn a management fee on almost every step of the process. You're not just selling one product, you're managing an event. Think about everything that happens between the moment someone passes away and the day they're laid to rest. Someone has to transport the deceased from the hospital, nursing home, or residence. Someone has to complete state paperwork. Someone has to obtain certified death certificates. Someone has to coordinate with clergy or celebrants. Someone has to reserve cemetery times. Someone has to prepare the body. Someone has to order flowers. Someone has to print memorial programs. Someone has to organize transportation. Someone has to communicate with dozens of family members. And someone has to make sure every single one of those things happens exactly on schedule. That's you. The funeral itself might last 2 hours. The work behind it often takes 40 to 60 hours spread across several employees. That's why experienced owners don't think of themselves as selling funerals. They think of themselves as managing logistics. Now here's the number that determines whether your funeral home becomes a respected local business or an expensive financial headache. It's not the average price of a funeral. It's not how much you charge for a casket. It's not even your profit margin. It's your annual case volume. Everything revolves around how many families you serve each year. Because this is a business with incredibly high fixed costs. Whether you conduct 50 funerals or 150, your building still needs to be heated. Your hearse still needs insurance. Your funeral directors still expect salaries. Your mortgage payment doesn't suddenly shrink because fewer people passed away this month. Those costs stay almost exactly the same. Revenue doesn't. Let's walk through a realistic example. Imagine you purchase a medium-sized funeral home serving a suburban community. The business averages 120 services each year. Let's say the average revenue per service, including merchandise, service fees, transportation, and memorial packages, is $8,500. That produces just over $1 million in annual revenue. Sounds impressive. Now let's subtract the costs that change with each funeral. Caskets, urns, flowers, obituary notices, transportation expenses, and outsourced services might average around $2,700 per case. Multiply that by 120 services, and you've spent roughly $324,000. So far, so good. But now come the fixed expenses, payroll for licensed funeral directors, embalmers, administrative staff, and part-time attendants, the building mortgage or lease, property taxes, commercial insurance, vehicle maintenance, utilities, software, marketing, legal compliance, accounting, equipment maintenance. Before you know it, another $500,000 to $600,000 disappears. Suddenly, that million-dollar business isn't generating $1 million for you. It's generating perhaps $150,000 to $220,000 before debt payments and taxes. That's a respectable business. But here's where things become interesting. Suppose your reputation improves. Local hospitals begin recommending you more often. Online reviews increase. Pre-planning seminars generate additional leads. Instead of serving 120 families this year, you serve 140, only 20 additional funerals. That's it. At an average revenue of $8,500 each, you've added another $170,000 in sales. But here's the important part. You didn't need another building. You probably didn't need another hearse. Your utilities barely changed. Most of those fixed costs remained exactly where they were. Only your variable expenses increased. If each additional funeral costs roughly $2,700 to perform, those 20 extra services cost around $54,000. That leaves roughly $116,000 in additional gross profit from only 20 extra families. Notice what happened. Your revenue increased by about 17%. Your profit may have increased by 50% or more. That's operating leverage, and it's one of the most powerful concepts in this entire business. The opposite is also true. Imagine a new competitor opens across town. Instead of serving 120 families, you only serve 100. You lose 20 cases. Your payroll doesn't suddenly fall. Your mortgage stays exactly the same. Insurance stays the same. Utilities barely move. You've lost nearly $170,000 in revenue while saving only a fraction of that in expenses. A small decline in case volume can wipe out most of your annual profit. That's why successful funeral homeowners obsess over reputation. Every five-star review matters. Every referral matters. Every family experience matters. Not because they're trying to win internet popularity, because every additional case spreads those fixed costs across more revenue. That's the economic engine. Now you may be wondering something. If reputation is that important, why don't funeral homes simply spend huge amounts on advertising? Some do. But the highest performing funeral homes usually generate business through trust, not marketing. Referrals from churches, relationships with hospice organizations, connections with hospitals, estate attorneys, financial advisors, community organizations. Families returning after decades because they remember how their grandparents were treated. This industry runs on reputation accumulated over generations. You can't buy 50 years of goodwill with Facebook ads. Now let's talk about getting into the business yourself. Because unlike opening a coffee shop or a retail store, buying a funeral home isn't something you decide to do over a weekend. First, you need a suitable property. Most communities require funeral homes to comply with specific zoning rules. Many residential neighborhoods prohibit new funeral homes entirely. Even commercial zones may require special use permits. And don't underestimate local opposition. People often say they respect funeral homes. They just don't necessarily want one built next to their neighborhood. Public hearings can become surprisingly contentious. Then there's licensing. Nearly every state requires funeral establishments to operate under licensed funeral directors, and many require licensed embalmers as well. Those licenses involve education, whereas examinations, apprenticeships, and ongoing continuing education requirements. If you don't personally hold those credentials, you'll need to hire someone who does. And experienced licensed professionals aren't inexpensive. In many markets, a licensed funeral director can earn between $65,000 and $100,000 annually, while highly experienced managers often earn considerably more. Next comes the building itself. Unlike a typical office, a funeral home needs specialized facilities. Private arrangement rooms, viewing chapels, preparation rooms that meet health regulations, refrigeration systems, ADA-compliant access, special ventilation systems, secure storage areas, parking capable of handling large funeral gatherings. Retrofitting an existing commercial building can cost hundreds of thousands of dollars before serving your first family. Then comes transportation. A new hearse can easily cost $120,000 or more, depending on customization. Removal vans typically range from $60,000 to $90,000. Limousines, if you decide to operate them yourself, add another substantial investment. Many smaller operators lease or finance these vehicles to preserve cash. Insurance may surprise you even more. You're transporting employees, families, expensive vehicles, and human remains. General liability, commercial auto, professional liability, property insurance, workers' compensation, cybersecurity coverage for sensitive records. Premiums add up quickly. And then there's compliance. OSHA regulations, health department inspections, environmental rules regarding chemicals used during embalming, hazardous waste disposal, record-keeping requirements, consumer protection laws governing funeral pricing. One paperwork mistake probably won't bankrupt you. A pattern of compliance failures absolutely can. By now, you're probably noticing a pattern. Nothing about this business is cheap. Nothing about it is simple. And yet people continue entering the industry every year. Why? Because once everything is operating efficiently, a well-run funeral home can generate something many entrepreneurs spend decades chasing. Predictable demand, not explosive growth, not viral success. Predictability. And in business, predictable cash flow is often worth far more than exciting headlines. The question is whether you can survive long enough and invest enough capital to reach that point. Because before you ever conduct your first service, you'll have to write some very large checks. Before we talk about profit, we need to talk about one of the biggest mistakes first-time buyers make. They dramatically underestimate how much cash this business actually consumes before it starts producing reliable cash flow. Let's assume you're buying or building a respectable independent funeral home in a mid-sized American city in 2026. Not a massive corporate location with multiple chapels. Not a tiny direct cremation office either. Something capable of serving around 130 to 160 families per year. The first major expense is the property. If you're purchasing an existing funeral home, the real estate alone could easily cost anywhere from $900,000 to $2.5 million, depending on the market. If you're building from scratch, you're looking at commercial land, site preparation, parking, landscaping, utilities, and a purpose-built facility. Construction costs have remained elevated following years of labor shortages and higher material prices. A modern funeral home with approximately 8,000 to 10,000 square feet can easily cost $350 to $500 per square foot to build once you include specialized preparation rooms, viewing chapels, HVAC requirements, and accessibility features. That's roughly $3 million to $5 million before you've purchased a single piece of equipment. Then comes the preparation room. This isn't simply another room in the building. You'll need embalming tables, body lifts, refrigeration units, specialized plumbing, ventilation systems, disinfection equipment, protective equipment, chemical storage, preparation instruments. Those costs can quickly reach $200,000 to $400,000, depending on the level of equipment you choose. Now add your vehicles. A professionally equipped hearse typically costs between $120,000 and $180,000. A removal van might add another $70,000 to $100,000. If you offer limousine transportation for families, each vehicle could cost another $80,000 to $110,000. Even if you finance these purchases, you're committing yourself to significant monthly payments before generating meaningful revenue. The furniture isn't cheap either. Viewing rooms require quality seating. Arrangement offices need professional furnishings. Audio and video systems are expected today, especially as families increasingly incorporate slideshows and live streams into services. Digital memorial displays, large screen televisions, professional sound systems, backup generators, security cameras, access control. Together, these items can easily exceed $150,000. Then come the hidden expenses that almost nobody talks about. Legal fees, business acquisition costs, environmental inspections, building inspections, software systems for case management, website development, search engine optimization, initial advertising, telephone systems, document management software, merchant processing systems, cybersecurity protection, employee recruitment, background checks, uniforms, working capital. Those expenses don't create visible assets, but they'll still cost you another $200,000 to $400,000 before opening your doors. And then there's inventory. You don't want your first customer waiting 3 weeks for an urn or memorial product. You'll likely carry a selection of caskets, urns, keepsakes, memorial stationery, prayer cards, flowers, and other merchandise. Depending on how much inventory you stock, that's another $100,000 to $300,000 tied up on your shelves. When you add everything together, opening a quality independent funeral home can require somewhere between $4 million and $7 million in total capital, whether through cash, financing, investors, or seller financing. That's substantially more than most people imagine. Now here's the good news. Once those investments are made, many of your largest costs become relatively predictable. Payroll will almost always be your single biggest operating expense. A funeral home serving around 150 families annually might employ 2 licensed funeral directors, an embalmer, office staff, part-time attendants, removal personnel, and maintenance workers. Combined payroll and benefits can easily exceed $600,000 per year. Next comes debt service. If you've borrowed several million dollars at today's commercial interest rates, your monthly loan payments alone may rival the payroll expense. Then come utilities, heating and cooling large chapels, running refrigeration units 24 hours a day, maintaining preparation rooms, lighting, water, internet, security monitoring, vehicle fuel, property taxes, equipment maintenance, professional insurance. Every month those bills arrive whether you conduct 10 funerals or none. This is why cash flow management becomes absolutely critical. Funeral homes don't receive customers on a perfectly predictable schedule. Some weeks you may conduct 6 services, other weeks you may only conduct 1. Yet your bills continue arriving with perfect consistency. Successful owners build cash reserves specifically to smooth out those fluctuations. Now let's talk about revenue. This is where many outsiders become overly optimistic. You hear that the average funeral costs several $1,000s, multiply that by the number of services performed each year, and suddenly it looks like every funeral homeowner should be wealthy. Reality is a little different. Let's revisit our example of a funeral home conducting 140 services annually. Suppose the average revenue per family comes to $8,800. That includes professional service fees, transportation, memorial services, merchandise, cremation or burial coordination, and administrative services. Annual revenue would total approximately $1.23 million. That sounds impressive. But revenue is not profit. After merchandise costs, payroll, debt payments, insurance, utilities, taxes, maintenance, vehicle expenses, marketing, software, legal compliance, and every other operating expense, a healthy independent operator might produce a net operating margin somewhere around 10 to 15%. That leaves annual operating profit between roughly $120,000 and $185,000. A very well-run business in a strong market may perform better. Poorly managed operators may perform much worse. Now compare that with the largest company in the industry. Service Corporation International, or SCI, owns more than 1,900 funeral service locations and cemeteries across North America and generates billions of dollars in annual revenue. Their scale creates advantages that independent operators simply can't replicate. They purchase caskets in enormous quantities. They negotiate lower insurance rates. They centralize accounting. They spread technology investments across hundreds of locations. They invest millions into marketing and brand development. Most importantly, they diversify risk. If one location has a slow year, dozens of others may compensate. You don't have that luxury. Your reputation lives and dies with one building, one community, one market. And that creates another challenge: competition. Contrary to what many people think, funeral homes don't simply inherit customers forever. Families relocate. Religious preferences change. Consumer expectations evolve. Price transparency has increased dramatically. Online cremation providers continue entering the market. Some families now prioritize affordability above tradition. Others prioritize personalization above cost. That means independent operators must constantly adapt. The funeral home that refuses to modernize may slowly lose market share every single year without realizing it. Technology has become another competitive factor. Families increasingly expect online obituary pages, digital guest books, live stream services, electronic document signing, online pre-planning, digital payment options. Miss those expectations, and younger families may choose another provider. Labor presents another growing challenge. Licensed funeral directors remain in relatively short supply in many regions. Recruiting experienced professionals has become increasingly competitive. Higher wages help attract talent. Higher wages also reduce profits. Then there are legal risks. A single mistake involving identification, transportation, documentation, or handling of remains can result in lawsuits, regulatory investigations, and devastating reputational damage. Unlike many businesses, your mistakes don't simply disappoint customers. They become deeply emotional stories that communities remember for decades. Trust takes years to build, minutes to lose. So after everything we've covered, should you actually own a funeral home? The answer depends entirely on why you're interested. If you're looking for a business that grows explosively, scales rapidly, and doubles every few years, this probably isn't it. This industry rewards patience, discipline, operational excellence, and community relationships far more than aggressive expansion. If you're expecting easy money simply because demand is guaranteed, you're almost certainly going to be disappointed. Guaranteed demand does not guarantee profits. However, if you have significant capital, strong management skills, a long-term investment horizon, and the ability to earn trust within your community, a funeral home can become an exceptionally stable business. Not because you'll become rich overnight, but because you'll own an essential service that people will continue needing regardless of economic cycles. The best owners understand something that newcomers often miss. They aren't in the funeral business. They're in the trust business. Every family they serve becomes a living advertisement or a permanent warning for the next family who walks through the door. That's why the most successful funeral homes are often the ones whose names have remained on the building for generations. They've spent decades earning something that no amount of advertising can buy. So if you're thinking about owning a funeral home, Don't ask yourself whether people will always need funerals. They will. Ask yourself whether you can build a business that families will trust with one of the hardest days of their lives. Because once you understand that trust, not death, is the product you're really selling, you understand the economics of owning a funeral home.